Good morning, everyone. Welcome back to the session on accounts. So today we are continuing our discussion on consolidated financial statements. We started about the understanding of CFS in the last session, wherein we understood the basic premise using which consolidated financial statements are required to be prepared. We also understood about some basic principles in relation to control, in relation to subsidiaries, in relation to the group, as to when the consolidation is required to be done, and how this consolidation really is required to be considered in the CFS. Now today, I'm just hoping that you have come after reading the points which I gave you. Yeah, that was section 9 of this chapter. So I'll start with this part straight away. Some of these points were related to the consolidation procedures which we discussed. And goodwill and capital reserve is again something that we have already talked about. So let me just move you to this example number 1, with the help of which we will try to understand some of these procedures or some of these requirements related to consolidation. So if you can all move to example number 1 on page number 10.15. And we are on to CFS. H Limited acquires 70% of equity shares of S on 1st January 2000 X1. So H Limited acquires S Limited, and this is 1st January X1. On that date, paid up capital of S was 10,000 equity shares of rupees 10 each. So its capital was 1 lakh. Correct? Accumulated reserves of S on this date was 1 lakh. This was also 1 lakh. H Limited paid 1,60,000 to acquire 70% interest in S. So it has paid 1,60,000. So that's the purchase consideration which has gone off. Assets of S Limited were revalued on 1st January 2000 X1. So on this date, assets of S got revalued. There was a revaluation loss of 20,000. So revaluation loss was there equivalent to 20,000. Book value of shares of S Limited will be what? So if we have to compute the net assets of S Limited, what would they be? They would be 1,80,000. Correct? It's 1,80,000. Now, in respect of this, what do we see? In respect of this, 70% of the stake has been acquired by H Limited. Now, what will be the 70% portion over here? 70,000, 70,000. And this will be 14,000. So this becomes 1,26,000. total position of S Limited in terms of its net assets was this, but H Limited acquired 70%. That means the worth of 1,26,000 has been acquired by H. Okay. Therefore, if we have to compute the goodwill or capital reserve, what would it become? Purchase consideration is 1,60,000 less net assets of S Limited. So it will be 1,26,000. So what do we get? 34,000. What is this 34,000? This is goodwill. So excess of purchase consideration over net assets of the subsidiary or of the acquired entity would be what? Goodwill. So we can say excess of purchase consideration over net assets of acquired entity. Now this acquired entity is about the subsidiary. So what do we call it as? This will be goodwill. Clear? Yeah. Moving on to example number 2. A Limited acquired 70% interest in B Limited. Now instead of H, it's A. And this is B. On 1st January 2000 XY. On that date, B Limited had a paid up capital of 1 lakh and accumulated balance in reserve and surplus was also 1 lakh. So it's same. On that date, assets and liabilities of B Limited were also revalued and there was revaluation profit of 20,000. So this was profit. So let me just change it. So this will become 2,20,000. Okay. Therefore, the amount in respect of net assets of B on a proportionate basis would be what? That would also change. So this would therefore become 1,54,000. Okay. Yeah. 1,54,000. Now in this case, what's the amount which has been paid to acquire? A Limited paid 1,30,000 to purchase the said interest. Now instead of 160, it's 130. So in this case, we have purchase consideration of 130 and this is 1,54,000. This is B. So now this amount will not be positive. This will be negative. So what's the amount? 24,000 negative. Correct? This is 24,000 negative. Now the moment we get this amount as negative, that will not be called as goodwill because it will be negative goodwill. So the negative goodwill sort of situation will be known by the name of capital reserve. We will call it as capital reserve. Now we can say that the excess of net assets of acquired entity, excess of net assets of acquired entity over purchase consideration. That will be called as capital reserve. Okay, clear on this? Everyone clear on this? Yeah, all right. So this was about the computation of goodwill or capital reserve. Now moving further. Now we will get on to the understanding related to the minority interest. Now, what is minority interest? In the last session, we discussed about minority interest. It's the proportion which is held by those shareholders who do not control the company. Means which is not controlling. Okay. Now, whenever the consolidation is done, so the parent will consolidate entire amount of subsidiary, means full subsidiary he will consolidate. But the part of the subsidiary which belongs to the minority, should that get consolidated by the parent? Not really. But because the parent follows line by line consolidation, wherein everything related to the subsidiary gets consolidated, that's why in the financial statements at the consolidated level, parent will show a part of the subsidiary which he has consolidated but which doesn't belong to him. And that is shown in the form of balance towards minority interest. Okay. So now, if we move on to minority interest, how do we really compute the minority interest? Very simply. For the subsidiary, we will have to compute the net assets, and a portion of the net assets, means the proportionate amount of those net assets will be the part belonging to the minority interest as on the date of acquisition of that subsidiary. And subsequently, this minority interest will keep getting its share in terms of the proportion of the profits or losses, whatever be the case. Yeah. Any of the revaluations of the assets of the subsidiary company we have discussed as to how those are required to be adjusted. Yeah. Now I'll also take you to this adjustment related to minority interest. So we can now move on to illustration number 1. We can move on to illustration number 1 to discuss about this minority. Yeah, quickly. Let's move on to illustration number 1. So this is page number 10.20. From the following data, determine in each case minority interest at the date of acquisition and at the date of consolidation. So let's understand what are the dates of acquisition. Say this is 2020-21. So this is 1st April 2020 and sometime on, let's suppose, 9th August 2020, a subsidiary has been acquired. So this date will become the date of acquisition. And 31st March 2021, when the financial statements are required to be prepared, that will be called as the date of consolidation. Date of consolidation means when the financial statements are prepared, means the closing date, end of the year. Now consolidation will start from 9th of August. Consolidation starts from 9th of August. Consolidation will not be done on 31st March. On 31st March, consolidated financial statements are prepared, but it starts from this date. Okay. So we are required to determine minority interest on the date of acquisition and the date of consolidation, goodwill or capital reserve. Third, amount of holding company's profit. Holding company's profit means the profit which will go to the consolidated financial statements. In the consolidated balance sheet, assuming holding company's own P&L to be rupees 2 lakh in each case. Own P&L means, so there's a holding, there's a subsidiary. So holding will have some P&L balance, holding will have some reserves. So they are saying holdings balance of P&L, its reserves are 2 lakh. And holding will also pick up a share of subsidiary. Yeah. So this is something we'll have to complete. So we are given 4 cases, case 1, 2, 3, 4, wherein the percentage shareholding is different in 4 different subsidiaries. Cost of investment is given. What is cost of investment? Means the purchase consideration. Date of acquisition is 1st of January 2000x1 and it seems to be a calendar year because the date of consolidation is 31st December 2000x1. So we are given the net assets of the subsidiary on both the dates. So let's get on to the computation. Yeah. All right. So first of all, what do we need? We need minority interest. So let's move on to the minority interest. Okay. Now, what is minority interest? A portion of net assets of the subsidiary. Okay. So we can say we have a subsidiary, and this subsidiary has got net assets. In this subsidiary, holding has 80% and minority shareholders have got 20%. So what is this minority interest? 20% share of net assets of the subsidiary will be minority interest. Okay. So this is what we need to compute. So let's get on to this computation. So we have 4 cases. Case 1. Then we have minority percentage share. Minority percentage. In case 1, it will be 10%. Why? Because the parent holds 90%, so minority will hold 10%. Correct? Okay. Then the next information is about the minority interest on the date of acquisition. So minority interest, this is date of acquisition. So on the date of acquisition, reserves are, what's the amount of reserves? 1 lakh plus 50,000, correct? It's 1 lakh plus 50,000 into 10%. So what do we get? What do we get? 15,000. Okay. Now, similarly, we can also compute this minority at the date of consolidation. So on the date of consolidation, what do we have? 1 lakh plus 70,000. Into 10%. So this will be 17,000. Okay. Yeah. Okay, Mukhamala, I am hoping you are clear on this now. Illustration is illustration 1. Okay, clear? Now, moving on to case number 2. All of you, can you start quickly solving this now? This will be 15%. And now for this, it's 1,30,000 into 15%. So what do we get? Can you quickly compute and let me know? 1,20,000 into 15%. Easy to do. Yeah, easy to do. Can you quickly tell me the amounts? Number 3. This will be 20%. Yeah, you need to confirm these amounts, please. 50 plus 20, 70,000 into 20%. And then we have again 70,000 into 20%. Case number 4. Okay, yeah. Case number 4, we have 100%. So what's the minority percentage? 0%. So will there be any amount to the minority? No. Will there be any amount to the minority? No. Because it's wholly owned subsidiary. Now quickly, for these, can you give me the amounts? So this will be 14,000. This will also be 14,000. Correct? I'm just hoping that you are solving this alongside. Ram Kumar is saying for case 2, it should be 19,500. Very good. And for this one, he's saying it should be 18,000. And same is the response from Vasudha. Thanks to all of you. Yeah. So with this, we have computed the first part, that is minority interest. Now what's the second thing we are required to do? Next step. Goodwill or capitalism. Easy, yeah? So now what I'll do is, I'll just wait for a couple of minutes. So that you can just continue with this. You should not wait. You should now move ahead. I'm hoping you would have understood the approach as to how this needs to be solved. So if you can just move on to this second part, goodwill or capitalism, and of course then the third part, and start sharing your answers. Then I'll also go to the solution, but I'll wait for a couple of minutes so that you can start solving it. Okay, Sangeeta, Prakash, they have also shared the responses. Very good. Meghna is asking, sir, cost indicates what? Cost indicates the purchase consideration, means the amount which is paid for acquiring the interest. So you can also say it is cost of investment. Okay. Clear? I'm hoping you are continuing on this solution further. Just I think it's very easy. Mukamla is asking what's the meaning of E into A. Please forget, E, A, B, you should forget. I think we have already solved this. Let's follow this, please. E, A, B, anyways, is given after the table in the study material. Nandishwaram has also found this to be easy. Okay, great. So now I'll move on to the second part, that is about goodwill or capital reserve. Goodwill or capital reserve. So again, we have 4 cases. So starting with case 1. What's the percentage shareholding? Percentage share in first case was 80. Sorry, it's 90 in first case. Then what's the cost of investment? Means the purchase consideration. Cost of investment. In the first case, it is 1,40,000. Right? From purchase consideration, what do we need to reduce? Net assets of the subsidiary. So do we have the net assets of the subsidiary? Yes, of course. It's 1 lakh plus 50,000. Total equity is what? 1,50,000. Now this computation will be done on the date of acquisition. That means 1st January X1. Okay. Now this is the total portion of net assets. But the portion of net assets which has been acquired by holding is what? 90%. So we will pick up 90% of this. Yeah. So the parent's portion of total equity, what it would become? 1,50,000 into 85%. This is 90%. So this becomes 1,35,000. Yeah. So now what do we get? Goodwill. Or if the figure will be negative, we will call it as capital reserve. So let's understand. Purchase consideration is 140 minus 135. It's positive. So it's 5,000. 5,000 is what? If it is positive, it will be goodwill. It will be negative, it will be capital reserve. Yeah. Shore has computed. Shore is saying goodwill first case. Very good. Same is the response from Shubrat. And same is the response from Shivendra. Very good. You can just continue quickly, start sharing your answers for case 2, 3, 4. And once again, I am hoping you would have found this to be easy. So then we have 85%. And the cost of investment is 1,04,000. Then we have 1,30,000 and 1,30,000 into 85%. So what do we get? We get 1,10,500. So now, what do we get? It's negative 1,04,000 less 1,10,500. So for case 2, what do we get? Schroeder is saying it should be capital reserve. Very good. It should be capital reserve in case 2. Okay. Yeah. Easy to do. Correct. And Ram Kumar is giving the same answer for case 2. Great. You can now give me the answer for case 3. Case 3, it is 80%. And this is 56,000. This is 70,000. And 70,000 into 80%, 56,000. So we get nothing, neither goodwill nor capital reserve in case number 3. Yeah, correct? It's nil. Darshita is giving the same answer for case 2. Very good. Ankita has also, I think Ankita's response, the previous one has come now. Shekha is asking why negative amount is transferred to goodwill. That's the accounting now. Number 4, 100%. Now, if the stake is 100%, do we get goodwill or capital reserve? Yes. Because if it is 100%, then the minority interest will not come, but goodwill or capital reserve will have to be checked. So this is 1 lakh. And what's the net assets? Net assets are 90,000. So this will also be 90,000. So what do we get in this case? 10. And 10,000 will be what? Goodwill. Correct? Vaishnavi is saying case 3 was goodwill or capital reserve. None. Because if it's nil, it is none, neither of them. Okay, clear? Because if it's 3, it's nothing. Sangeeta has given the same response for case 4, and same is the response from Vaishnavi, Mohini, and Shubrat. Shora has given the answer for case 3. It's same. Very good. So now we'll move on to the next point. That is about computation of the balance, or you can say balance of reserves, or you can say the reserves which will sit in the consolidated financial statements, which will go to the consolidated financial statements. So moving on to part number 3. And I can just use this information, so that's why I'm not deleting it. Now we are required to compute P&L balance in consolidated financial statements. So once again, we will start with case number 1, wherein the percentage shareholding is 90. Mukula is asking, sir, please explain the meaning of columns, headings, meanings, and equations. See, I don't want to go with what is written in the study material. I think we need to understand it conceptually. Yeah, and if you are clear on this part, then unnecessarily we should not go to what is written in there. Yeah, if you want to just go through that solution, you can practice that later on, and everything is explained over there. Percentage shareholding. So now, on 1st of January 2000 tax 1, what's the balance of P&L? It's 50,000. P&L balance on 1st of January X1, it's 50,000. Correct? And P&L balance on the date of acquisition, on the date of consolidation is 70,000. P&L balance on 31st December X1 is 70,000. Okay. So what is the post-acquisition profit or loss? Post-acquisition profit is what? 70,000 minus 50,000. It is 20,000. Correct? So this is the profit which has been generated after acquisition. So the amount which will get added to the P&L will be what? 90% of this 20,000. So the amount to be added to P&L at CFS level will be 20,000 into 90%. So this will be 18,000. Or we can say this amount is subsidiaries portion. So subsidiaries amount to be added to P&L at CFS level. Nakul is asking, sir, what is parent's portion of equity? Means the share of the parent in equity. What is the share of parent? 90. Over here it's 85. Over here it's 80. Over here it's 100%. Means what's the shareholding of parent? Okay. Next situation. We have the reserve of 30,000, then 20,000. 30 and 20. So that means after acquisition, there must be a loss of 10,000. Only then the reserves will go down. Yeah. And the portion of this will go to the P&L at consolidated level. So we will say 10,000 into 85%. So this will be 8,500 negative. Next, we have 20,000 over here and 20,000 over here. So this will be nil and this will be nil. So means no amount out of the profits of subsidiary will go to the consolidated level. Okay. Moving on to the next one. It's 40,000. Then this is 55,000. So there is increase of 15,000, which will go to P&L on 100% basis. Clear? Okay. Yeah. Abhishek is saying, sir, what about dividend treatment? So was there any dividend treatment in this example which we have missed? Can you tell me, Abhishek, where are you picking dividend from? I'm confused with your query. Shore has shared all the responses now. Okay, great. Mukmala is asking, sir, what's the objective in calculation of these values in real-time scenario? Real-time scenario means, again, I'm not clear on your query now. What do you mean by real-time scenario? Okay, so if you have any questions, please let me know. We'll now move on to the next part. Okay, so now moving further on to illustration number 3. If you can all move to illustration number 3, please. There again, we will see some of these computations. So illustration 3, and this is page number 10.2. X Limited acquires 70% equity shares of Z Limited as on 31st March 2000X1 at a cost of 70 lakhs. Okay, so X Limited has acquired 70% equity shares of Z, and for this acquisition 70 lakhs has been paid. So what is 70 lakhs? Purchase consideration. Following information is available from the balance sheet of Z Limited on the date of acquisition. So certain assets and liabilities of the acquired company are available. Following revaluations have been agreed upon in relation to the assets of the subsidiary, but in the values which are given in the table, those revaluations have not been included. So X acquired Z 70% and paid 70 lakhs. So what's the amount? 70 lakhs is paid by X. Now when the assets, net assets of Z are transferred to X, it has been agreed between two that some of the assets of Z will not be moving at book value. Instead, those will be revalued and those will move to X or the books of X at agreed values. So what are those agreed values? PPE should be increased by 20%, investment should be decreased by 10%. Further, Z Limited declared and paid dividend at the rate 20% on equity shares as on the date of acquisition. Face value per share was rupees 10. X Limited purchased the shares of Z Limited at the rate 20 per share. So the face value of share was rupees 10, but X has paid rupees 20 per share. Okay. Now, why would this number, this value per share would have been given? To compute the number of shares. What are we required to compute? Goodwill or capital reserve. Very simple. Yeah. Now, for this computation of goodwill or capital reserve, we need two things. Only two things. One, purchase consideration. And what is the second thing? Second thing, that is about net assets. Okay. So let's move on to this computation now. We need two things now. Goodwill or capital reserve. Now we don't know whether it will be a goodwill or capital reserve. So in the exam, this heading you can give later after you compute. Because when you will start solving it, you will not know whether it will be goodwill or capital reserve. But you should write only one. Goodwill computation or capital reserve computation. Okay. So that's why in the exam you can write this later on. Now moving further, what's the first thing we'll need? Purchase consideration. Okay, for which we can give the reference of working note 1. Less net assets, for which we can give the working note reference 2, and that will give us goodwill or capital reserve, which is not known to us right now. Yeah. So now in this case, what's the first thing we'll do? We will compute this amount of net assets. So I'm going to working note number 2 first of all. Net assets. So in terms of net assets, what do we have? PPE. What's the value of PPE? 120. But this needs to be increased by 20%. So what would it become? 144 lakhs. What's the next thing? Investments. Those need to be reduced by 10%. Investments 55. So a reduction of 10%. So this will become 49.5. Okay. Then we have current assets 70. Then we have loans and advances 15. Loans and advances 15 lakh. So this is the amount of total assets. So what do we get? Total assets 278.5. From this we will reduce less liabilities. So what is the amount of liability? 15% debentures of 90 lakhs. Of 90 lakhs. Okay. Next one is current liabilities of 50 lakhs. So this is 140 lakhs. So all in all, what do we get? 138.5. Okay. Now 138.5 is what? Total net assets of the subsidiary. Now, what's the portion of X Limited in this? 70%. 70% of this belongs to X Limited. So that's why out of this 138, what is the proportion that X Limited will pick up? $138.5 into 70%. So this will be 96.95 lakhs. And this number we can move over here. 96.95. Okay. Now the next step, that is about computation of purchase consideration. Working note 1. So this is purchase consideration, or you can say cost of investment, or we can say cost of acquisition. So we can call it by different names. Alright. Vaishnavi has also solved this, and I think Vaishnavi is getting the same answer. Very good. Now, in terms of the cost of acquisition, what's the amount that has been paid? 70 lakhs. Amount paid is 70 lakhs. Now, if we look at the dividend which has been paid by Z Limited, what's the amount of dividend? If you have to compute the amount of dividend, can you tell me the amount of dividend? Let's try to compute it. So we have total cost of 70% equity of Z Limited equivalent to 70 lakhs. Total cost of equity %. Okay. Total cost of equity, total cost of 70% equity. What is that equivalent to? 70 lakhs. And each share has been purchased for ₹20. Per share value is ₹20. This is lakhs. So how many shares would have been purchased? Number of shares purchased will be 70 lakhs divided by 20. This will be 3.5 lakhs. So that's why 3.5 lakh shares would have been purchased. Okay. Now, dividend which has been paid at the rate ₹2 per dividend has been paid at the rate at the rate 20%. So dividend is 20%. That is ₹10 into 20%. That is ₹2 per share. So the amount of dividend will be ₹2 per share. Yeah, dividend is what? ₹2 per share. Why? Because dividend will be paid on the face value. What's the face value? ₹10. That means dividend has been paid at ₹2 for every share. So how many shares have been acquired? 3.5 lakhs. So what's the total amount of dividend that would have been paid to X Limited? So we are only looking at the amount of dividend paid to X Limited. So dividend received by X Limited will be, I'll just clear this part now. You can say this was working note number 3. I'm sorry, I forgot to give the reference. This was 3.5 lakhs. That's the number of shares into 2. So this becomes 7 lakhs. Okay. Sure is asking, sir, how do we get the amount of equity? That is 70 lakhs. See, it's given in the question. We are saying the amount which is paid is what? 70 lakhs. This is the amount paid. It's given in the question. When you say total cost of equity of Z Limited, so we are saying the proportionate amount of 70%. So when X Limited, please understand, X has acquired Z. Whatever is the amount of equity of Z, its 70% has gone to whom? X. So that means equity of Z would be what? 100. If this is 100, its 70 would go to X. What is equity? Equity is nothing but the net assets. Okay? But you should not look at these net assets. Why? Because these are adjusted with the revalued amount. And we are looking at adjustments prior to revaluations. Okay? Mokmala is asking, sir, why we take face value? Because that's the principle. That is how dividend is paid. Dividend is always on face value. Okay? Now, as a principle, and this is something which you would have understood under paper number 1, so I will not get into too much details around it. Whenever dividend is paid out of pre-acquisition reserves. Now, if you look at this dividend, to which period does it belong to? Does it belong to the period after acquisition of this subsidiary? No. Why? Because when was this subsidiary acquired? This subsidiary was acquired on 31st March X1. And on that very day, dividend has been paid. So that means this dividend belongs to pre-acquisition period. So if the dividend belongs to pre-acquisition period, as per the accounting principle, it needs to be reduced from the cost of investment. What's the cost of investment? This is the cost of investment. So dividend needs to be reduced from this, from the cost of investment. So what's the cost of investment after reduction of dividend that we have? 63 lakhs. I'm just repeating this point. Under paper number 1, you would have understood about investments accounting. In AS 13 also, I'm sure you would have covered this. That whenever dividend is paid and it belongs to pre-acquisition period, then it is required to be reduced from the cost of investment. Okay. So that's why the cost of investment will be what? 63 lakhs instead of 70 lakhs. So what do we take over here? 63 lakhs. And accordingly, we can compute goodwill or capital reserve. I'm sure this will be a negative amount. So that's why it should become capital reserve. Okay, and we should clear this part. It's capital reserve. Okay. Clear on this? Yeah. So whenever there will be any dividend in the question, and if that is for the period prior to acquisition, that will get reduced from the cost of investment. And if that is for the period after acquisition, then it will not be adjusted from cost of investment, it will go to P&L. All right. Darshita, I think, computed this. Very good. Abhishek has also computed this. Moini is saying it is deducted from the cost. Yes, that's correct. Yeah? Clear on this principle? So this was also about certain adjustments in relation to dividend, which you may be required to do. All right? Yeah? So now we can, in fact, this illustration number 2 you should mark for your homework. Huh? Illustration number 2 you should mark for your homework. Or maybe we can pick it up. Illustration number 5 you should mark for your homework. Okay. So we'll now move on to illustration number 2, but illustration number 5 should be your homework. Please note down. Your homework is illustration number 5. This is page number 10.26. Okay. Nandeshwaram is saying how much marks will be allotted for this. So there is no specific part which I can say, but this is a very important chapter, and I think you should also look at the weightage which is given on the ICAI's website for your reference. Huh? So let's move on to illustration number 2. This is page number 10.22. Homework is noted. Okay, yeah. So moving on to illustration number 2, XYZ purchased 80% shares of ABC on 1st January 2000X1 for rupees 1,40,000. Issued capital of ABC on the date of acquisition was 1 lakh, and the balance in the P&L of ABC on 1st of January 2000X1 was 60,000. During the year ended 31st December 2000X1, ABC earned a profit of 20,000 and at the year end declared and paid a dividend of 15,000. Okay. Show by an entry the dividend as to how it should be recorded in the books of XYZ. So let's understand the fact pattern. So we have ABC and XYZ. Okay. XYZ purchased 80% of its shares. And when it purchased, it paid 1,40,000. This is the amount paid. On the date of purchase, ABC had capital of 1 lakh and it had reserves of 60,000. Then after 1 year, so this took place on 1st of January X1. After 1 year, ABC earned a profit of 20,000. Profit of 20,000. So what will happen? If you look at the end of the year, capital will be 1 lakh and profits will increase. So the reserve will increase by 20,000. Okay? Yeah. Now, at the end of the year, ABC declared and also paid a dividend of 15,000. Over here, ABC gave a dividend of 15,000. Okay. In this case, first of all, we should comment how this dividend amount will be recorded in the books of XYZ. Now, if ABC will pay dividend, to whom this dividend will be paid? This dividend will be paid to the shareholders. ABC would have 2 categories of shareholders. One, that is parent. So 80% of the dividend will go to XYZ and 20% will go to the remaining shareholders. Correct? Correct. So that means out of this 15,000, 80%, that means 12,000. Yeah, 12,000. Will go to XYZ. Now, if you look at the P&L of XYZ, as we have discussed, 2 treatments are possible. If we say that this dividend belongs to pre-acquisition period, what is pre-acquisition period? This is pre-acquisition period. Then where should this dividend go? This should get adjusted with the cost of investment. But currently what we see is that this dividend has been paid out of these profits. It will always be assumed that the dividend is paid out of current year's profits. So if the dividend belongs to current year's profits, where will this company take it? To its P&L. So what will XYZ do? Bank debit to dividend income. Instead of crediting investment now, it will say to dividend income. 12,000 and 12,000. Okay. Clear on the accounting entry? Aditya is saying, sir, it should be bank debit to income on investments. Income on investments debit to P&L. That's correct. And Abhishek is saying 12,000 should go to XYZ. That's correct. Punyama, I think I'll have to come back to your query later on. And Mukumala, I'm thinking your doubts are cleared. Anyways, we can just look at your doubts at the end of the session, please now. Now, what's the next thing which is required to be done? Next thing the question asks, what is the amount of minority interest as on 1st of January X1 and 31st December? Also check if there should be any goodwill or capital reserve. Now, this is easy to do. Yeah, simple. So as a next step, we are required to compute goodwill or capital reserve. That is easy to do. So this remaining part of illustration number 2 should also be marked as your homework. Okay. So I'm just marking this as your homework, please. the second part of illustration number 2. Alright, this should also get added to your homework. Okay. Abhishek is saying, sir, why the investment has not been credited? Because this has not been paid for the pre-acquisition period. This doesn't belong to pre-acquisition reserves. This is towards post-acquisition. And anything which is towards post-acquisition goes to the P&L. And that doesn't get adjusted with the cost of investment. Okay. Alright, so now we'll move on to illustration number 4. And I don't think that we will be able to get to the solution of this illustration number 4. With the help of this illustration, we will understand one concept regarding share of losses to be attributed to minority interest. As we would have understood by now that year on year after the acquisition, percentage share of profits or losses of the subsidiary will go to two parties, parent as well as minority. Okay, this percentage share will go to both the parties. And it's not necessary that it will be profits. It can also be a loss situation. So the losses will also go to the parent as well as the minority interest. But as around the minority, there is a specific guidance in terms of the share of losses of the subsidiary after a specified time period. Let's understand that. If you can go to the solution of illustration number 4, let's read the first para, only the first para, and then we'll come to the question. The losses applicable to the minority in a consolidated subsidiary may exceed minority interest in the equity of the subsidiary. The excess and any further losses applicable to the minority are adjusted against the majority interest. Majority interest means parent, except to the extent that minority has a binding obligation to and is able to make good the losses. If the subsidiary subsequently reports profits, all such profits are allocated to the majority interest until minority share of losses previously absorbed by the parent has been recovered. Many of you would have not understood this para, but some of you would have understood. It doesn't matter. My idea was to just make you read this para. And we'll read this para once again after we will solve illustration number 4. Okay. In simple terms, you can say that when the minority will lose out its complete balance, it will stop absorbing any of the losses. It will stop absorbing any of the losses. And all of those losses will get transferred to the parent. Parent means majority shareholder. And this treatment will understand in more detail by solving this. So let's go to the illustration number 4 now. A Limited acquired 70% equity shares of B on 1st April 2000 X1. and paid 10 lakh for this. On this date, B Limited had a capital of 10 lakhs and reserves of 80,000. In the 4 consecutive years, means after acquisition, B Limited fared badly and suffered losses. After 4 years, in 2005, in 2000 X5, X6, B Limited experienced turnaround and started generating profits. And it registered a profit of rupees 50,000 after 4 years. Means in the 5th year there was a profit. In the next 2 years, means in 6th and 7th year, again there were profits. We are required to compute minority interest and the cost of control at the end of every year. At the end of every year, we are required to compute this. Okay. Yeah. So now, if some of you would have understood this, or maybe if you would understood the requirement, very simply, year on year, we are required to compute minority and cost of control. Very simply. That's it. Yeah. So what I am doing now is I am taking a break of 10 minutes. In the meantime, if you want to take a break, of course, you can also take a break. But if you believe no, you don't want to take a break, you want to solve this question, then you can get on to the solution. After the break, we will also go to the solution. All right? Clear? Yeah? Yes, it's up to you. If you want to solve this, it's okay. Otherwise, anyways, after the break, we will get to the solution. Okay? Yeah? So let's meet after the break. Hi, welcome back. So we can now move on to the solution of illustration number 4. And if any of you have also attempted this, you may please let me know about this. Any of you, if you would have attempted this, any part of the solution you would have got, you may let me know. So let's go to the solution then. Yeah. So very simply, we need to allocate the reserves to minority at the end of every reporting year. Okay. And I think we will need some space here. So if you want to prepare any working notes, etc., you should reserve some space for that. So it was the date of acquisition when the minority interest will be computed. So you can say period or year at the time of acquisition in 2000 X1. 1st April X1. Then we will also see if there is P&L over here and the minority percentage. Minority interest percentage. So what's the percentage of minority? 30%. 30%. Okay. Now some portion of this will go to the consolidated P&L. And the portion, in case it will not really be borne by minority, so it will be distributed. And I'll come to this slightly later. So we can now move on to the computation of minority interest to start. And that's why we can give the reference of a working note over here. Working note number 1. So on the date of acquisition, share capital and reserves are 10 lakh and 80,000. Okay. Share capital is 10 lakh. Reserves are 80,000. Correct? So holding will get a share of this and minority will also get a share of this. So holding will get 7 lakh. Minority will get 3 lakh. That's the proportion which will be assigned to them. Similarly, reserves will be distributed. 56,000 goes here. 24,000 goes here. So this becomes 7,56,000. This becomes 3,24,000. Okay. So minority amount is computed on the date of acquisition. So if we have to move this amount, we can move this amount over here. 3,24,000. Now just remove this part because we need space for this. 3,24,000. Giving the reference of working note number 1. And in terms of cost of investment, so this is what? Proportionate share in the net assets of the subsidiary. Proportionate share in net assets of the subsidiary. So what's the cost of investment? $10 lakh. Okay. So this is the portion of net assets and this is the amount of purchase consideration. So what do we have in this situation? Goodwill. So this is goodwill. 10 lakh less 10 lakh less 7,56,000. So what do we get? We get 2,44,000. 2,44,000. That's the amount of goodwill, and that will also be called as cost of control. So we'll put that balance over there. Okay. Now, at the end of first year, that means X1, X2. During this year, there was a loss of 2,50,000. There was a loss of 2,50,000. Okay. Nandeshwam, don't worry, there's nothing difficult in this question. Now, out of this loss, 30% will go to minority. So that's why 75,000 we can put over here. Because 2,50,000 into 30%. This will go to minority. Alright. This will go to minority. And the remaining amount will go to console P&L, to the majority, we can say to the parent. So we can say additional console P&L. Additional why? Because in the console P&L there will be a P&L balance of parent and a portion of subsidiary. So this will be 250 less 75, 1,75,000. So this loss will go to the parent in the console. Yeah. And on this date, there will also be a balance of cost of control. So we can say cost of control was 2,44,000. This is nothing but goodwill, and this remains unchanged. Goodwill will not change. This will remain same. And we are not looking at the amortization. Correct? So now, on this date, what will be the balance of minority interest? The balance of minority interest will be 3,24,000 minus 75,000. It becomes 2,49,000. Okay. Then next year, once again, there is a loss. 2,000 X2, X3. Once again, there is a loss. Now the loss is 4 lakh. Now same way, this loss of 4 lakh will get attributed to minority. Yeah. So this will become 1,20,000 negative. 1,20,000 negative will go to the minority, and the remaining amount will go to majority. 2,80,000. In fact, if you look at the balance over here, this would have been 2,44,000 remained same last year. Now, after absorbing this loss, what will be the amount of minority interest? Balance. It will be 1,29,000. Okay, and the cost of control continues to be 2,44,000. Yeah, so you can just say this is the first. This is the end of first year. This is the end of first year. This is the end of second year. And 249 minus 129. 120 we got 129. Okay. Then moving on to next year. 2000 x3 x4. Once again, there was a loss of 5 lakh. There was a loss of 5 lakh. Now, out of this loss of 5 lakh, a loss of 1,50,000 will go to minority and 3,50,000 will go here. Correct? So what is the balance of minority after this? 21,000. And now the balance of minority has become negative. Minority balance has become negative. Yes, Abhishek. Yeah, that's Goodwill. So we can say it is 2,44,000 over here once again. Okay. Now, the moment the balance of minority will become negative, what do we need to do? This loss of minority interest, or we can say the portion of the loss of minority interest, which is making the balance of minority interest as negative. So I'm just repeating my point. This loss of minority interest, which is making the minority interest balance as negative, or you can say the portion of loss of minority interest which is coming out as negative will be apportioned to, will be transferred to the parent. So this loss of minority will be transferred to the parent so that it doesn't remain negative. It can be zero, but it cannot be negative. So now on this year, at the end of this year itself, what do we do? This loss will be transferred to the parent. So minority share of losses borne by A Limited. Minorities share of losses borne by parent. Who is the parent? A Limited. So let's understand how will it bear the losses. 21,000. So now loss transferred. So this will become 0. And this loss will shift over here. So this will become 21,000 negative. So this loss has been transferred to the parent. Now, if you want to know what is the portion of loss of minority which the parent has absorbed, that is 21,000. Now, during the year 2003 x4, 21,000 is the amount which parent has borne towards minority. And if the parent wants to keep this amount as a balance with itself, so the balance will be 21,000. Okay, clear? Now next year we see a loss once again. it is 1,20,000. So 2000 x4 x5. There is a loss of 1,20,000. Okay. Now once again it will be attributed to minority. 36,000. 36,000 is the share of minority and remaining is the share of majority. 84,000. All right. And I am not computing this balance. This is not required. You don't need to get into that computation. Now this 36,000 once again will be transferred to whom? Parent. So this loss will be transferred once again to parent. So this once again becomes nil. This becomes negative. And if we have to keep accumulating the portion of loss which is absorbed by parent towards minority, then what would it now become? 21,000 was the portion which the parent absorbed earlier. 36,000 has got added over here. So what's the balance? Which will now become? It will become 57,000. And the goodwill continues to be 2,44,000. Vijay Shankar is saying, will the cost of control remain same for each year? Yes. Abhishek is saying, we have to transfer this negative balance to the holding company? Yes, that's the principle. Okay. Abhishek is saying it will be borne by A Limited? Yes. It's borne by A Limited and A Limited is also accumulating this balance. That in the first year, when it absorbed, for the first year it was 21,000. Second year it absorbed, it was 36,000. So on a combined basis in 2 years, 57,000 has been absorbed by A Limited. Okay, clear? Now, in the next year, X5, X6, let's see how will this position change. So we'll move on to the next year now, and I'll need some space. Now, what are the balances, etc.? It was nil for minority, and over here, this was 57,000, correct? And this was 2,44,000. So I'm just moving the numbers on this side. Okay. Now, in 2000, X5, X6, companies started generating profits of great. 50,000 has been the profit. So what will happen? Again, a portion of this will be transferred to minority and majority. Okay. Now, because the minority had transferred a part of its losses to majority, so now what will happen? Now, after generating profits, whatever portion minority had transferred to majority, to the parent, to that extent, profits of minority will also be transferred to parent. Or you can say, to the extent of this 57,000, any profits which would be allocated to minority, those profits would also get transferred to parent. Yeah. So let's see how do we do this. Less transfer to parent. So this entire amount will get transferred to the parent. So once again, it will become 0. So this becomes 15,000. And over here, 15,000 will be the negative number. Negative number means because it was accumulation of losses. So if the profit comes, that will be negative. And this 15,000 will be reduced from the losses. So the portion of the loss which the parent is still carrying towards minority will now become 42,000. And this will continue to be 2,44,000. Okay, clear? Now this concept, I don't think we will be able to understand without looking at the practical example, because you may be thinking, but sir, we didn't discuss too much in detail about this. So this will be best understood with the help of example only. And I think now you would have started appreciating the concept. So next year, in 2000, X6, X7. X6, X7. Once again, there are profits. Once again, there are profits. What's the amount of profit? 1 lakh. Now this 1 lakh will be transferred over here and here. And same way, this profit of 30,000 will also get transferred to majority. Less transfer to parent. 30,000 goes away, it becomes nil. 30,000 goes over here. 30,000 comes over here. And this 30,000 also comes over here. So that's why it would lead to 42 minus 30,000. So this will be 12,000. Correct? And this continues to be 2,44,000. Alright. Now, in the next year, once again, there is a profit 1,50,000. So 2,000 x7 x8. Once again, there is a profit of 1,50,000. Now 45,000 out of this will go to minority, and 1,05,000 out of this will go to the parent. But do we need to transfer entire profit of the minority to the parent now? No. Now the parent has got only a balance of 12,000 as the amount which it had absorbed and is still pending. So that's why, what would the minority do? Less transfer to parent. So it will be limited to 12,000 only, with which it will be left with a profit of 33,000 in this year. This 12,000 goes here, this 12,000 goes here, and this 12,000 goes here, with which this balance will become 0, and this anyways has to remain same throughout the. Okay. So this is all about the concept related to a situation wherein if the losses when attributed to the minority and which make the minority balance as negative, how do we deal with those losses? Okay, yeah. So now, as we discussed, we will come back to the same concept So let's go back to the solution, the first para of the solution. And let's read this, because I'm hoping that now when you read this para, you will get the clarity. Okay. So let's go to this para once again. All right. Let's go to the solution, please. Let's read this para quickly and let me know. Quickly, if you can read this para. Let's read this para. Yeah? And please let me know if you have read this and you have been able to understand this now. The losses applicable to the minority in a consolidated subsidiary may exceed the minority interest in the equity of the subsidiary. Yeah? The excess and any further losses applicable to the minority are adjusted against majority interest. Who is majority interest? Parent. Except to the extent that minority has a binding obligation to and is able to make good the losses. So in case there is a binding obligation on the part of the minority to absorb the losses, even if it becomes negative, then it will continue, but otherwise not. If the subsidiary subsequently reports profit, which happened in our case, subsequently it started reporting profits over here. All such profits would get allocated to majority. 15,000 got allocated to majority until minority share of losses previously absorbed by the majority has been recovered. Accordingly, minority interests will be computed as follows, which we discussed. All right, all of you clear? Sakshi is clear on this. Very good. Aditya is saying, sir, will there be any situation when cost of control gets affected? I don't think so. Yeah. Clear on this part? Okay, so now what we can do is, we can move on to the preparation of consolidated balance sheet. So with this, we have discussed most of the adjustments. These are all consolidation adjustments which would arise while preparing consolidated financial statements. Okay, Shubhrat is also clear on this. Very good. Now, as around the preparation of the consolidated balance sheet, there is a very simple principle you need to remember. Very simple principle. Just do line by line addition of each and every item. And all these adjustments that we have discussed so far, you need to incorporate those adjustments in the CFS. That's it. Okay, that's it. Yeah. So now we will try to apply this concept of line by line addition in illustration number 6. So I am now moving straight away to illustration number 6, wherein we will also prepare consolidated balance sheet. So page number 10.28. Illustration number 6. You remember around balance sheet we discussed that we need to simply add all the line items. Okay. So let's read this. From the balance sheet, prepare consolidated balance sheet of Virat and Anushka Limited as at 31st March. Virat holds 80% shares in Anushka since the incorporation of Anushka Limited. So in this case, Anushka Limited is the subsidiary. Yeah. And Virat is the holding company. So we are given the balance sheet of two companies as at 31st March X1. So separate information about these two balance sheets are available to us. Now, as a next step, what do we need to do? We need to prepare the consolidated balance sheet. So now for the consolidated balance sheet, we can just use the information which is available in the standalone balance sheets of these two companies only. Okay, yeah, so that's the starting point. So let's look at the consolidated balance sheet as at same date. So what do we have to start with? Equity and liabilities. Okay, you should write everything now, particulars, etc., everything, just to reserve some space. I have not been writing, but in the exam, please be very, very clear when you write all of these aspects. Then we have this amount and the note number. Then it's the share capital, reserves and surplus. Number 1, 2. Then, because the shareholding of the parent is 80%, so that's why we will also have minority interest. Minority interest is required to be presented separately in the balance sheet under liabilities side. Then we will have non-current liabilities. On the non-current liabilities, we see in the balance sheet long-term borrowings. So it will be long-term borrowings, for which we can give the reference again. Then we have current liabilities. On the current liabilities, we have got trade payable, which is note number 5 for our purposes. Okay, then of course we can give the total over here. Yeah, then we will have assets, and we start with non-current assets because in the balance sheet. So I'm picking up all of this information from the balance sheet given in the question. Okay, so this will be PPE, which will be note number 6. Then we are also given non-current investments, but this non-current investment seems to be the investment in Anushka Limited, and which will get eliminated. So that's why I'm just removing this line item. In case in the exam you have a confusion, you can just leave space. Right? Next, current assets. Current assets. So we have got inventory, trade receivable, cash and cash equivalent. Inventory, trade receivable, cash and cash equivalent. So this will be 7, 8, 9, and then of course 2. Now for our purposes, each and every note is required to be prepared. Mukula is saying, sir, you have taken a problem which is not there in the old material. Please take any other problem. See, I would suggest all of you to please refer to the new study material, because it's very, very important for you to keep referring to the new study material. It's available on the website. You can download it right away. Okay, clear? Now, another thing that we will require for the purposes of balance sheet would be computation of goodwill or capital reserve, if any, and the computation of minority interest. But we can go to it later on. Yeah, we can go to that later on. First of all, what do we need? We need to incorporate the information in the balance sheet. So first one is share capital. Now the share capital of Anushka Limited will get adjusted while computing goodwill or capital reserve. So what are we left with? 60,000 equity shares of rupees 10 each. Of rupees 10 each. So this is 6 lakhs. So 6 lakhs we will take over. I'll come to the reserves slightly later. I'll come to the reserves slightly later. Aditya is saying, sir, you have wrongly numbered them. Wrongly means, I think this is illustration 6 only. Can you please clarify now? Henry is asking, sir, why we didn't take the investments. I'll let you know. Okay, please wait. Aditya is saying, sir, you have wrongly numbered the note numbers. No, it's 1, 2, 3 I am reserving for minority. 4, 5, 6, 7, 8, 9. So it appears to be correct. What's the problem, Aditya? Maybe you can just recheck. Okay. Yeah. I think Aditya has given the numbers. No, it's correct. I am reserving 1 for minority in case it's required. Maybe I can put it. So let's see. Now, okay, I reserved it. So note number 2 I'll pick later on. Note number 3 I'll pick later on. So I'm moving on to note number 4. Note number 4 is what? Long-term borrowings. Now what do we have on long-term borrowings? Long-term borrowings of 2 companies will be added. ₹2 lakh and 1 lakh. ₹2 lakh and 1 lakh. So this becomes 3 lakh. So 3 lakh is what we put over here, because there is no adjustment in the long-term borrowings. Then note number 5, trade payables. Note number 5, trade payables. Once again, it will be added. So what's the amount? 1 lakh each. So this will be 1 lakh and this will also be 1 lakh. So this is 2 lakh. This also becomes 2 lakh. Clear? Note number 6, PPE. So same way, there is no adjustment. So this will be added. So I'm just changing this to note number 6. PPE. So these 2 will be added. So this is 4 lakh and 3 lakh. This is 4 lakh. This is 3 lakh. So all in all, this becomes 7 lakh. Okay. And note number 7 is inventory. That will also be added. Inventory. Once again added. 160 and 2 lakh. 1,60,000 and 2 lakh. So this will be 3,60,000. 3,60,000. Okay. Then we have trade receivables, 80,000 and 1,40,000. Note number 8. Trade receivables, 80,000 and 1,40,000. So what does it become? 2,20,000. So this will become 2,20,000. Okay. Note number 9. Cash and cash equivalent, 40,000 and 60,000. $40,000 and 60,000. So this becomes 1 lakh. So this is 1 lakh. Okay, clear? Now, moving on to the next part. Next part is about the computation of reserves and the computation of minority interest. Because these are the two things which are pending. Yeah? So So first of all, we will compute these amounts and then we will come back to these notes. Now, if you look at the information about these two companies, since Virat Limited holds shares in Anushka Limited, since its incorporation, the entire reserve balance of rupees 1 lakh will be the one which is post acquisition, correct? What's the proportion of minority in this case? 20%. Okay. So let's look at the balances in terms of net assets of the subsidiary. For the subsidiary, share capital and reserves are 4 lakh and 1 lakh. For the subsidiary, and we should write the name equity, share capital and reserve. This is 4 lakh and 1 lakh. So all in all, this is 5 lakh. Correct? Now a portion of this 4 lakh will go to minority and a portion of this will go to the majority. So what's the portion of this that will go to the minority? So minority interest will be what? 5 lakh into 20%. That is 1 lakh. Very simply. Correct? Minority is what? 1 lakh. Very simply. Yeah. So if you want to give a note, you can also include a note. Currently, I am just straight away taking it over here. Okay. This note number 3 you can prepare. I am not going on to note number 3. Vijay Shankar is asking, sir, why aren't we taking 80% of the assets? Because that's what the rule of consolidation requires. Pick up all the assets and liabilities. And that is where you put this 20%. See, in this balance sheet, what have you done? You have taken 100% of the assets of the subsidiary. And because you have taken 100% of the assets of the subsidiary, that's why you are saying that this entire balance sheet, which I have, has got 1 lakh of the portion which belongs to minority. That's why you show minority over here. Otherwise, what is the purpose of including minority interest over here? Okay, clear? Abhishek is asking, sir, we have to add all those items that are included in the balance sheet of the subsidiary? Yes. Shaurya has solved this. Very good. Now, if we look at the share capital and reserves, for the purposes of computation of minority, we could do it very easily. But for the purposes of holding company, we also need to get into the computation of goodwill or capital reserve. Yeah. So that's why what we will now do is, we will apportion some part of this to pre-acquisition and some part of this to post-acquisition. So we can say we have equity share capital 4 lakh and 1 lakh. Now what is pre-acquisition in this case? Now I am looking at only the portion of holding. So the portion of holding is what? 80%. 3,20,000. This is what? Pre-acquisition. This is what? Pre-acquisition. Of course, the share capital will be pre-acquisition only. It can't be post-acquisition. But these reserves have been generated during the year after the acquisition. So is there any portion which is related to pre-acquisition? No. And what is this post-acquisition? Post-acquisition over here is nil. And 80% of the profits out of the total profits are all post-acquisition only. They are all post-acquisition only. Okay. And when the investment would have been made by Virat Limited in this company, what is the amount that would have been paid? So this is the total amount of net assets pre-acquisition. Net assets on the date of acquisition. Now, what is the amount that would have been paid on the date of acquisition? Purchase consideration, 3,20,000. So that's why, will there be any goodwill or capital reserve? Yes, but that would be nil. That would be nil. And this 80,000 of the post-acquisition reserves of the subsidiary will get added to the reserves of the parent. They will get added to the reserves of the parent. Yes or no? So now what do we need? Now what do we need? We now need to go to the reserves. So let me just take you to note number 2 now. Let's go to note number 2 now. Reserves and surplus. So on the reserves and surplus, we have got reserves and surplus of parent 1 lakh, and for the subsidiary, can we pick up the entire amount? No, only the part we can pick up. So this working note number 1, 80,000 can be picked up. And while we are picking up 80,000, what about 20,000? That 20,000 has gone to minority. So 20,000 belong to minority, they have taken away. And 80,000 belongs to majority, so that has come over here. So all in all, what would it become? 1,80,000, which we can take to the balance sheet. Now, with this, can you give me the total of 2 sides of the balance sheet? Assets total and the liabilities total. Can you all give me the total, please? Quickly. What's the total that you'll get? Quickly. This is the most important part. When you compute the totals and you start praying that the balance sheet should match, isn't it? Does it happen to all of you? This is a very crucial moment in the exam. It will be very crucial when you will be totaling this. You just keep praying that, oh God, my balance sheet should tally. Yes or no? Okay, Sakshi is saying it's 13,18,000. Both sides? Yeah, that means assets as well as liabilities. Or is it only one that you have totaled? Aditya is saying it's 13,80,000. Nandishwaram is saying assets are 13,80,000. 13,80,000 is the total of assets and 13,80,000 is the total of liabilities also. Very good. Thank God the balance sheet has matched. Yeah. So now we can take a sigh of relief, isn't it? Yeah. It feels so good to see that the balance sheet has matched. Correct? Okay, great. Aditya has confirmed. Sakshi has also confirmed. Great. Now let's try to understand some of the principles out of this consolidated balance sheet, and which were definitely a point of confusion to some of you, and which would still be a point of confusion to many of you, but you may not have asked that question. So let's understand all of those points one by one. Okay, let's understand that one by one. Just 1 minute. Whenever we will prepare consolidated balance sheet, one thing that you would have understood is that each and every line item of the subsidiary and the holding will get added. Everything. Yeah. We saw that in case of borrowings, liabilities, PPE, inventory, trade receivables, cash and cash equivalent. Number one. Number two, the share capital of holding company will be taken to consolidated balance sheet. Share capital of subsidiary will not go to the consolidated balance sheet. Why? Because share capital of subsidiary will get adjusted for the computation of goodwill or capital reserve. Correct? Similarly, investment. You asked me one question. Sir, investments you have not picked up. So the investment of the parent in the subsidiary would also be picked up over here. What is this purchase consideration? This is nothing but the investment of parent, that is Virat Limited, in the subsidiary. So this has again gone on to the adjustment while computing goodwill or capital. So that means both of them have also been considered. So that's why you will not see that appearing over here. Okay? Yeah? Next thing, using all of these principles, what do? Using all of these principles, you compute goodwill or capitals. And goodwill or capital reserve computation we have done quite a lot. So that is something we know. It's not something which is new to us. Correct? We have done this quite a lot. We have practiced a lot of questions around it. Yeah? Next, when we will compute reserves, once again, for this, you will have to remember one point, that these will again not be added line by line. Why? Because the reserves of the parent will be picked up as it is, but a part of the reserves of the subsidiary will get allocated to minority interest. Okay, that's why only the part of the reserves of the subsidiary which belongs to parent will be taken to reserves and surplus, not entire amount. Not the entire amount. Only a part will be taken over here. Okay. Next. And there comes the most important point, and which I have also sort of explained you. When we are doing this entire consolidation, who is preparing the CFS? Holding company. So this is prepared by holding company, Virat Limited. And the holding company actually has got only 80% of the subsidiary. So ideally, all of these items should have been picked up to the extent of 80% only. And what are these items? These items are nothing but the net assets. Can you see this? All of this is what? All of this is nothing but equivalent to the net assets. Yes or no? These are net assets only. So if the net assets have been picked up in the consolidated balance sheet 100% instead of 80%, 100% instead of 80%. So this excess 20%, which the holding does not own, which does not belong to holding, what would the holding do in this respect? Show a liability, or you can say show a kind of liability towards minority interest. That because I picked up additional 20% in excess of what I had, so that's why I'm showing that towards minority. And that's the consolidation procedure. So we can't follow proportionate consolidation. That's the procedure which we are required to follow in this case. Okay. Aditya is saying, sir, can you please explain working note number 3, which is shown in the module? See, don't get into that module now. If you have understood this working note, that's one and the same thing. Because I can see many of your queries wherein you specifically want to understand, sir, what's the word which is written in study material? So what is this term which is written in the study material? See, all of these terms in simplified manner, I have brought it over here. And these two are no different. Everything I am picking from the study material. So if you have understood this principle, that is automatically understood. You can revise it later on. Nakul is saying, why is the minority interest shown in the CFS? I think I just clarified that point. Mukmala, I think you have got the email ID of the relevant team. I think that's ICAI at inter level. There's some email ID which you can use for sending across your queries, any doubts, any problems. Currently, definitely we are having the sessions wherein you can ask your queries. After that also, I'll just check with the team as to what the email ID. You can post your queries over there in case you have any doubts, etc. All right. So I don't remember the email ID right now. I have to check and share that with you. Okay. Clear? All of you? So now, with the same principle, using the same principle, you should get on to illustration number 7 as your homework. So please note down illustration number 7. Your homework is illustration number 7, and this is page number 10.32. Page number 10.32 is your homework, which you should practice. It's the same type of illustration wherein you will be required to prepare consolidated balance sheet. Okay, yeah? Okay. Abhishek is asking for illustration number 5, second alternative. So let's get on to that homework, please. So I think I have given you two illustrations mainly, illustration number 5 and this illustration number 7. Of course, a part of that illustration of 2 was not significant. So I don't see that to be a significant part. Mainly it's about two illustrations which you should practice, and any of your doubts related to these two illustrations we can discuss when we meet tomorrow. So tomorrow I understand we have a session, right? All right. So with this, we can end our discussion. We can end our discussion. Aditya has got a suggestion. Aditya, it's about the one, it's about the same thing. So it's better to practice through the illustrations. Okay, yeah, clear? So with this, we can end our discussion, and I would suggest all of you to just make sure that you revise this part before we meet next, and definitely practice these illustrations. Okay, thanks to all of you. Once again, thanks so much.